This week, Google announced after earnings that they were going to spend $10 billion more on data center projects just this year. And get this, they said 2026 was going to be even higher. So when Meta and Microsoft report their earnings next week on Wednesday, we're expecting big things from them, including Amazon on Thursday. You better believe those three companies are going to announce that 2026 is going to spend even more on these data centers. This week, we also heard from Tesla when they reported their earnings and potentially this weekend launching a robo-taxi service in one of the biggest markets here in California, the San Francisco Bay Area. We've got a lot to discuss. What is going on, investors? Hopefully, you guys are doing well out there. We better kick things off like we always do with Meta Platforms. So the week at 7-11. A Slurpee sounds good right now because it's hot, but Meta shares not hot this week as over the past 5 days finished roughly flat at 7.12 as they head into earnings on Wednesday next week. Now, we got an AI action plan from the Trump administration promising less regulations and infrastructure and power and all those types of things. Probably good for the AI industry to maybe get a little bit of clarity on those types of things, but I think the AI action plan was already in full force without them. Speaking of politics, Meta is going to cease political ads in the European Union due to incoming regulation from what they call the Transparency and Targeting of Political Advertising Regulation. That's actually some decent money. I don't know about in Europe, but I know that Google actually called out political advertising as being a tailwind in the previous quarter and not lapping, obviously, without a major election. Now, you guys have asked for it. One last chance to buy into Equity Empire at the grandfathered early bird price. I'll have a link down in the description below if you want to become a subscriber. Just understand that you got to do it over the next 24 to 48 hours because the price is going to go up by about 50%. There's a link down below. If you're wondering about Equity Empire, I'll be posting all of our gains and losses publicly. This is both existing positions and closed position. Just this week, we closed out one of our first recommendations that was United Rentals for a 48% gain in about 3 months. We have gains in the portfolio sitting at 30, 60, 80%. Yes, there's some stocks that are down, but for the most part, things have been pretty good from a recommendation standpoint. You can go to the gym and work out on your own. You can go to a golf course and learn how to swing, but you can also get a personal trainer. You can also get a golf coach. Consider me your coach, your expert, your analyst. I'm working for you at the low price of $897 a year. Ask anybody that's a subscriber. They would tell you that it's worth it. Moving on to Apple, start of the week at 213. Are my glasses right? This stock also flat heading into earnings. Makes a lot of sense, right? The positioning heading into earnings has actually happened over the past couple of weeks. You'll see that technically. Meta setting up at the top of the range, Apple rebounding off the bottom of the range. Now it's decision day. When Apple reports their earnings on Thursday, the same day as Amazon, we'll get a little clarity. Now, in terms of App Store revenue, Morgan Stanley is seeing that surge ahead of earnings. That's interesting because there's not a lot from a holiday shopping season or any type of thing, but they say that App Store revenue has surged 12.5% year over year during the first 20 days of July. Now, the July quarter not necessarily included in Apple's financials, but you got to imagine if the first 20 of July has probably gone well, then previous months heading into this were probably decent as well. Now, Apple doesn't provide guidance. They're not going to announce products. Their earnings calls, quite frankly, are rather boring, but we'll see how the stock reacts. One thing that they did, I think, has actually increased some value here. Apple One is something that, or Apple Care One is something you can buy for your devices. So I rock, naked with my phones and I don't like cases and those types of things. So sometimes a screen breaks. So you can buy this Apple Care and it allows you to fix damages and those types of things. You used to have to pay for it on each device, but it looks like now for $20 a month, you can bundle coverage for 3 products. And that seems like a decent deal if you're like me. Now, moving on to Amazon. Start of the week at 227. This one actually drifting higher by about 2%. Heading into earnings next week on Thursday, Amazon reports the same day as Apple. Finished the week at 231. This as OpenAI competitor and one of the lead investors in Anthropic is actually Amazon. There's been some rumors that or some suggestion that Amazon should just buy all of Anthropic. It would give them access to what they need for their Alexa devices and also other types of AI things. Amazon playing it more as just kind of a lead investor, but you also have Google in there as well. Anthropic looking to raise money at a valuation in excess of $60 billion because the company believes that with the next round of funding, it could get to $150 billion in valuation. Now, the company has allegedly spoke to several investors, including going to the Middle East where they just print money there, and MGX, which is an AI investment fund out of Abu Dhabi. We'll see if the investment comes from the Middle East or maybe from one of the major tech companies. Amazon stepping up, buying a big chunk of this company. I've heard rumors that Apple should just come in here and buy everybody out because they could comfortably do that. Even at a $60-70 billion valuation, it would chew up most of their cash, but it would solve all of their AI problems in one fell swoop. We'll see what happens. This is a developing story. Now, Amazon is moving into more wearable personal devices as they acquired a San Francisco-based company called Bee. It appears that a lot of these companies are believing that like wrist-worn clip-on type of wearables where it's not necessarily a phone in your pocket or a device with a screen, that these clip-on devices that probably have speakers and those types of things, and obviously like Meta's glasses and Amazon had some glasses at CES and those types of things, that could potentially be a way to leverage AI into a device that is not dominated by Apple and Google. Moving on to Netflix, they obviously reported their earnings last week and shares drifted lower. Start of the week at 1,200, down another 2% this week to finish the week at 1,180. We're pulling back into a range with Netflix. We'll talk about that when we get to the technicals. That is because the company is a top 3 in Nielsen's media distributor gauge. Say that on Friday. YouTube, obviously controlled by Google, continues to lead there. It's really a 2-horse race, at least at the top in terms of streaming, Netflix and YouTube, but obviously Apple, Amazon, many other companies playing in that space as well. Moving on to Nvidia. Start of the week at 172. And on a week where you have Google committing $10 billion more in CapEx for data centers this year, and then already committing to more money in 2026, this is the exact thing we were waiting to hear. I didn't think we were going to get it until usually it was like October. You would start to hear rumblings and then the companies would confirm it on their third quarter conference call. The fact that Google has stepped out already in Q2 and is already forecasting some CapEx spend into next year because they're going to spend 85 this year. So they're basically telling you we're going to spend 95, 100 billion plus next year. So that's going to trigger all these other companies, including Meta, Microsoft, and Amazon, which report next week. I don't know if they'll weave that into their actual press release, but they are all three going to be asked about it on their conference call. With Meta, they've already showed their hand. They're going all in. They're going to spend a ton of money, not just this year, but next year. But Microsoft and Amazon executives are going to be explicitly asked, because you have competitors already committing more money this year and already more money next year, where are you guys going to be? So it'll be interesting to see if Amazon and Microsoft, which are more closely tied, Microsoft in particular, to Nvidia, whereas Google's more closely tied to what's going on over at Broadcom. That's why Google's announcement is very exciting for that company. But Nvidia is obviously going to benefit from a 2026 where you're not just going to see the same amount of CapEx, but actually more. Now, this all comes as President Trump said he considered breaking up Nvidia, like he has some magic button that he can press to break up companies. That tends to be kind of like a DOJ antitrust type of thing, but Trump could put the pressure on those types of things. And you have seen, I know the TikTok situation is slightly different, but he has essentially kind of spearheaded that. I know that was kind of started by him and it was finished by the Biden administration, and really the Congress actually passed a law there. So not all on President Biden, but basically the United States government does have the ability to break up companies, but he learned from Jensen Huang that it's not easy being Nvidia. And I think he's probably reading that situation pretty correctly. Now, AI chips worth north of $1 billion are smuggled into China. Forget all illegal type of things. I know AI chips are more like high-end AI chips are illegal to get into China, and that's what they're smuggling in. You know, you got a hot product when they're smuggling it. Apparently in China as well, there's a bustling business to repair A100s and H100 chips, which are actually banned in the country. And I'm sure the H20 chips as well, modifying them, repairing them. I've read articles that they're able to get the modified chips in there, do some tinkering, and then they can boost the performance and those types of things. And look, if you have that skill and you're in China, you're probably rolling in a couple of bucks. Moving on to Google, start of the week at about $188 per share. And you can see on the chart when they reported earnings, they went from 190 and they popped up to 194. Shares of Google settling around 193 on a week they reported earnings. Q2 revenue came in nearly 14% growth. They beat expectations by almost $2.5 billion, $96 billion worth of revenue. As we move into the back half of the year and into 2026, this is a company on $100 billion, not a run rate. That's a quarterly run rate of revenue. It seems like nothing is slowing down Google, even as AI takes over in terms of some search demand. The company outlined, like I said, $85 billion of CapEx in 2025. Previously, it was $75 billion. And the key sentence that I actually haven't seen a lot of people key on is they already committed to more spending in 2026, and it all makes sense. You go read ServiceNow's conference call. You go read even like a trucking company's conference call, and they're talking about AI. They're talking about their employees working better, working faster, saving money, and so it's something that is trickling down across all businesses at the current time. Now, the company is bagging huge cloud contracts because everybody needs space to create these AI products, including ServiceNow, which also reported earnings this week and really kind of put rocket fuel behind the idea that AI is catching on, not just at the tech companies, but at trucking companies, at healthcare companies, at financial institutions, and all these banks, and everybody is seeing the benefit of AI. It's not just the 7 stocks that we talk about here every week, and that is great for these companies and the semiconductor industry. Now, some people win gold medals for athletic achievements. AI is winning them in a math event. OpenAI also claims a win. This is significant. So you might see this and say, oh, well, AI wins a gold medal. This is significant because even a year ago, AI wasn't that good at math. I'll put that in air quotes just in case you're listening to this and not watching me. AI obviously could do math, but I don't need to get super deep into the weeds. Technically, I've certainly not an expert on this myself, but I've read enough research on this, and there's reasons why AI is not that great at math, but is really good at natural language. But these gaps and the capabilities are starting to close. The research and the way they're training these models, they're getting better at solving math. And obviously you start solving math equations, then you can do more science-based, more healthcare, more complex type of things, even answers and solutions to things we might not have solved here on Earth. So this is exciting, the fact that Google is leading the way here. And I think when you look across the board, while Google could be seen as a lagger in some cases with usage and maybe from an interface perspective, they're certainly a leader in terms of technology. And as long as they stay there, the company has the juice and they have the users to continue to do well, even as traditional search potentially falls by the wayside. Moving on to Microsoft. Microsoft reports their earnings next week, and it started this week at 508, heading into earnings like we saw with most of these companies, just drifting sideways, or this one actually up a point. Finished the week at 513. I mean, we're like $2 off a 52-week high that we made this week. We'll see if Microsoft able to report earnings on Wednesday that can push it even higher, or if we get a pullback, we get pullbacks in Microsoft. Could be interesting. Now, the company was slapped by a software hit this week by a widespread cyber attack. Chinese hackers are blamed or responsible for exploiting a SharePoint vulnerability. This shut down hundreds of websites. And I don't know if Starlink was down this week. Maybe the hacker community is alive this week. That should be good for cybersecurity companies. In fact, we're recommending one of them over at Equity Empire, and it's doing pretty well. Now, a Stargate project. This is the OpenAI, SoftBank, and Oracle partnership. And this has also kind of put maybe a little bit of chill on the Microsoft and OpenAI relationship, as OpenAI and Microsoft partnered in large part because Microsoft was going to partner and provide them with a lot of data center. But I think what Microsoft has found is they can't fill the void. OpenAI is so popular, they had to go to Oracle. And they just announced a 4.5 gigawatt partnership with Oracle. I don't know what a gigawatt is, but 4.5 of them sounds like a lot. Now, OpenAI is expected to launch GPT-5 in August. I've heard a lot of rumors around these types of things. Reminds me of the early days of the iPhone where the next one was coming and you started hearing about it and it made you super excited. Now when the iPhone comes out, it's kind of anticlimactic. But with these models, you're not exactly, it's so many people are using them for so many powerful things and they're saving money and they're getting more productive and it's improving people's lives. When the next one comes out, it's exciting. And will GPT-5 be just incrementally better or will it be a leap forward? We'll see what happens. One thing to note and one thing that's interesting, and I think Elon Musk actually made this point during the launch of Grok 4, was that most models that are getting launched now, including Grok 4, these were trained on the previous generation of Nvidia chip. And for the most part, GPT-5 was largely trained and developed on Hopper. It won't be until later this year and into next year you'll get Blackwell chain models. And Blackwell, as you know, is so exponentially better and faster and more powerful. So the models are only going to get more powerful heading into next year. That's what's exciting about this trend that I know seems maybe long in the tooth and like it's coming to an end, but in a lot of ways, it's just beginning. Moving on to Tesla, start of the week at 322 or 332, and then fell off a cliff and rebounded a little bit to finish the week down 5%. And I tell you what, being down 5%, I did a video on Tesla earnings for Equity Empire and I was going through it and I had to have like, you know, that bag when you're like on an airplane and you get turbulence and you might have to throw up in the bag. I almost had to have one of those next to me as I was going through Tesla earnings. They were so bad, but the future could be bright with AI and autonomy and robots. I mean, that's what they're spinning over at Tesla and they were able to have their shares really only down 5%. On pretty bad earnings. Revenues came in at $22.5 billion. That was 12% decline. We're seeing grandfather tech companies like Google growing 13, 14, 15%. Meta will report earnings next week. They'll be growing. Microsoft, all these tech companies are growing outside of Apple. Tesla's in decline, but they did beat expectations by about $360 million. They've done a nice job. They probably don't get enough credit for it, but they've actually done a nice job kind of scaling up their business when there was a lot of demand for their cars. And then as demand has come in, Tesla's actually done a decent job at not burning through a bunch of cash like you see at other automobile makers. I did another video on Equity Empire, an Intel video. Intel's financials are terrible. They're burning through billions and billions of dollars every quarter. And so it's actually a difficult thing to do, and they've pulled it off. So we're kind of focusing on the roses rather than the trash, if you will, for Tesla. But that's what you got to do. Now, California registrations. This got to be the number one market for Tesla. Down 21% in Q2. That's not good for the company. Now, in California, Tesla still has about 9% of the market, followed or it preceded by Honda and Toyota. So the fact that they're outpacing Ford and Chevrolet in this state is quite an accomplishment. But again, down 21%. I think there's some things that Tesla can do to rebuild their brand. It's not all hope is lost. They can pull it off. We'll see if they're able to do it. Now, they're eyeing a limited robotaxi launch. I saw as soon as maybe today on Friday. I'm not sure if that's the case, but potentially this weekend in the greater San Francisco area. Now, San Francisco is obviously, I probably don't need to tell you guys this. This is a premier market for robotaxis. If you've been in San Francisco City, you will see Waymos all over the place. I mean, it's unbelievable there. And so it is a huge market because San Francisco, it's difficult to even own a car there. It's tough to find parking. The streets are narrow. It is a city where not owning a car is actually pretty normal. And some of you might say, well, San Francisco has gone to heck because of the politics and stuff like this. I will tell you, the mayor of San Francisco is doing an unbelievable job. I was in San Francisco a couple of weeks ago. They were power washing the streets. I saw very little of the problems that you tend to see. Now you go to Oakland and it's a third world country. But San Francisco City is completely different since they've gotten a new mayor. So you see professionals, and this is what you need in San Francisco for a robotaxi network. You need people working in the office. There's a back to the office thing. There's an AI thing going there. They've cleaned up the streets a little bit. It's not a perfect city, but it's certainly started to improve. And so Tesla taking some of this market in there is great for the company. We'll see if they're able to pull this off. They talked about a lot on their conference call, and so far it seems like what's going on in Austin, Texas has been going relatively well, and we'll see if they can pull that off in San Francisco. Now, they pulled off a retro futuristic diner. I'm not exactly sure what this does for the company from a financial perspective, but it looked cool. You got TVs, you got a diner, you got people bringing you food. Eventually, I guess the Optimus is going to bring you food. This is in Los Angeles. This might kind of seem silly on its face, but this is an example of how Tesla can pivot away from Elon Musk and the focus on Trump and Elon and Doge into something that is different for the brand. It's not going to be overnight for this company, but if it can do things like this might be kind of like on the larger scale, but I think it would be wise for Tesla over the next 12 months, find some influencers, find some celebrities, find some athletes, start attaching the Tesla brand to them. A great example is American Eagle this week rolled out a campaign with an actress, and that attention that they've gotten to that company just based on a couple of ads is huge. And I think Tesla could do the same thing. I don't know if Elon Musk is game to it. I don't know if that's what he wants to do, but I think that's something that Tesla could do, and it would be interesting if they do. Now, moving over to the technical segment of the show. My charts are showing we just made a new higher high on the S&P 500. All is good. Don't worry if we get pullbacks in this one. Pullbacks in this market can be bought. Don't be surprised too, heading into next week. CapEx increase, bullish earnings, reduced tariff surprises. I mean, I'm going through all these conference calls and I'm like, where's the impact of these tariffs? Where's the impact of what happened in April? It's not there yet. Now, and I'm not saying that it won't show up later in the year. There's certainly an argument for that. I'm certainly trying to measure that. But right now, it's not showing up. It's not showing up in the consumer, not showing up in the employment data, not showing up really at all, not even showing up really in inflation, not in a major way. So we could come up here, make a new, I mean, we already made a new higher high on the S&P 500. So when you make a new higher high, you get pullbacks. The dip should be bought. Now, with Meta, we basically are sitting at all-time highs. When you sit at all-time highs and you report earnings on Wednesday for Meta, two things that can happen. And I'm sure you tuned in on your busy Friday for me to tell you the stock will go up and down, but you get a break to higher with Meta, it could really go. I mean, you can get into the $900, maybe $1,000 range in a short period of time, like over the next month or two. A rejection here can be bought. The first area is probably 600, 650 if you're really aggressive. Further than that, definitely should be aggressively bought. Apple has bounced off a very logical level down here at 193, is now hanging out in the middle of the channel. This one is set up for a move higher. The problem is Tim Cook is as dry as sand in the desert on his conference calls. He says nothing. He gives you like nothing on these conference calls. They don't provide guidance. They don't release product information. They don't have anything going on with AI that is probably surprising. And I say this in the next earnings call for them, which happens on Thursday next week. Will probably be the biggest one of all time. But for the most part, they're dry. And maybe that's what Apple needs to push higher. You've got a new higher high on this one, takes you to 265. That's $50 higher. That's a considerable move. A rejection lower creates some buying opportunities, but it does risk breaking the trend that we're on. Based on everything that we've seen leading up to this point with monthly sales data from China and this App Store data, my guess, things are probably doing pretty good over at Apple. Now, moving on to Amazon, looking similar to Meta, where we basically kind of set up at the top, made a double top formation, a break higher on this one, 260, 270, shoot, 300 is possible over the next couple of months. A rejection here creates beautiful buying opportunities. The biggest one down here at 194. You get rejected down to 194. That's like, push your chips in type moment. Netflix, I've got a fake red candle on here, but I got to pull it off. Ooh, look at where we're at with Netflix, right at the middle of the channel. So if you've been dying to get into Netflix, you want 10 shares, maybe with $1,000 stock, maybe it's for me and most people, it's like 5 shares. This is where you buy one. You got fractional shares. Maybe this is where you buy half a share. Further pullbacks in Netflix. This is one you're watching really closely over the next few weeks. Further pullbacks down to like 1,000. You might not want to split hairs with this one. The momentum of the business is actually pretty good. But this one, beautiful technical. I mean, this is as beautiful technical pattern, and it's like a 3-year one. It's just beautiful. So when you get these pullbacks, you got to know what to do, and you got to prepare yourself that. A break higher in Nvidia has happened, they don't report earnings for like a month. So you're not going to hear from them, although you hear from other companies. Heard from Intel, although they're on kind of the trailing edge at this point. You'll hear from AMD. I think probably next week. Pullbacks in Nvidia back to 153 is actually the first area where you can buy that one again. Google. I don't know if it's my internet slow or my chart got erased. Oh, there it is. We're racing to a new higher high on this one, probably heading into like that DOJ breakup type verdict. A lot of people are kind of bidding this one up into that verdict. So what to me, that is setting up when that verdict come across, could create maybe a sell the news type of thing, could be worse than it feared. And so pullbacks in Google can be bought. Microsoft heading into earnings on Wednesday, looking just like Nvidia, has broken to new highs. This is what we talked about with Meta and Amazon in particular. You break to new highs. The previous highs in Microsoft, I'll zoom in so you guys can actually see, the highs were here at 464. And look, we went to 520 like over the course of just a couple of weeks. Pullbacks in Microsoft, I know I always talk about the back test. This one has really gone way over and above, but obviously the back test can be bought. And then finally, Tesla's in kind of, a little bit of a different situation. It's hitting right at the middle of the channel. It's where Google was maybe 3 or 4 weeks ago. So, if you're a Tesla investor, you're hoping it goes the same way with Google, where you come back up here and retest at 520. I think the business is not looking good over it. The core business at Tesla is not looking good, but all the other businesses have a great story behind them, and that infuriates some investors. But I've learned over the years that, stories are oftentimes in the stock market as good as technicals and valuation and those types of things. And the story with Tesla's other products is actually pretty good. It wouldn't surprise me come back up here and retest 550 on this one. That would be a profit-taking moment. Further dips in this one can be bought. Your first opportunity is back down to 270. I mean, you can flip a coin. Who knows where it's go? One thing you shouldn't do is flip a coin on Equity Empire. If you wanted to lose weight, you probably should hire a personal trainer. If you want a good golf swing, you probably should get a golf instructor. If you want to do it on your own, if you want to learn how to invest and do all the research and read the reports, listen to the conference calls, by all means do it. If you only have $800 in your Robinhood account, I do not want your money. I don't want your business. But if you're a professional and you want to save yourself some time, you want people spoon feeding you picks and catering to you and providing you analysis and answering your questions, that's what Equity Empire is. And there's been a lot of subscribers that have already said they've made the money back on the service in one trade. In fact, I played golf with a gentleman who's a subscriber, and he doubled his money on a $10,000 pick that we had. So he turned 10,000 into 20, and he said he was going on vacation and he was going to have a nice vacation. And because of Equity Empire, it was going to be even better. These are the voices of our subscribers, but also just the public performance. And I'm going to be making this page public. And in fact, this is all I'm going to promote with Equity Empire going forward. I can say this is the performance of what I have done. These are the open picks. I will show you the recommendation date. I will show you the percentage gain and loss. I'll update it likely every week, every Friday. You can see on the low end, the worst pick right now, these probably need to be updated, but you're probably down 4 or 5% in a couple of names, and a couple of names just haven't taken off yet. At best, you've got names up 80%, 60, 70, 30, 40%. When you pay for a personal trainer, you expect to get buff. When you pay for a golf swing coach, you expect to start your path to breaking 80. When you pay for Equity Empire, you expect us to put up results, and that's what we do. Link down in the description if you want to join us. If not, that is perfectly okay. And I wish you the best of luck. And if you have any questions, I'll do my best to help you. Hopefully you guys enjoyed today's video. That was the FAANG Stock Recap Show for Friday, July 25th. I do want to say one thing, and that is my thoughts and prayers are with the Hulk Hogan family and his fans. As somebody that grew up, I didn't watch a lot of wrestling. Maybe I got into it for a year or two. But this guy was an icon, and he was a big part of a lot of people's lives as a child. And so when he passed away this week, it just made me think about my childhood. And so I want to thank Hulk Hogan for being an inspiration and entertainment for so many people my age. And I pray for his family and his fans. Thanks for tuning in. We'll see you again next week. A lot of earnings. And obviously, I'll join you again on Friday. Good luck with your investments.